You've probably heard the headlines, the housing market is cooling. But in some cities, it's not just cooling, it's crashing. Homes that were listed at record prices just months ago are now sitting on the market unsold, with price cuts slashing tens of thousands off their original asking price. Are you seeing this in your city? Homes sitting longer, or sellers slashing prices? Drop a comment and let's compare markets. And here's the real shocker. Some of the hottest housing markets during the pandemic are now seeing the biggest drops. Cape Coral, Austin, Denver. These are places where bidding wars were once the norm. Now, sellers are getting desperate. So if you're thinking about buying, selling, or investing in real estate in 2025, this video might be the most important one you watch this year, because by the end of it, you'll know the 10 cities most at risk of a home price crash and what you need to do to protect your money. Let's dive in. Why should you care about price cuts in cities you might not even live in? Because what's happening in these markets could soon affect the entire country and your own wallet. During the pandemic, home prices skyrocketed as buyers rushed to snag properties at ultra-low interest rates. Builders and investors responded by flooding the market with new homes, especially in Sunbelt and tech-friendly cities. Everyone thought the boom would last forever, but then reality hit. Mortgage rates jumped to 20-year highs. Monthly payments doubled, and suddenly fewer buyers could afford to play the game. Inventory began piling up, especially in places like Dallas, Austin, and Cape Coral, where new construction outpaced local demand. Now, sellers are caught off guard. Many are slashing prices just to get attention. And if you're a homeowner, you're probably wondering, is my equity safe? If you're a buyer or investor, you're thinking, should I wait for a better deal? Or is now the time to act before things get worse? Here's the truth. In 2025, the difference between a smart decision and a costly mistake could be as simple as knowing where and when home prices are about to crash. So what's really behind these growing price cuts? It comes down to three major forces: too much inventory, too little demand, and too high interest rates. Let's start with inventory. During the pandemic, builders went into overdrive, especially in the South and West. Cities like Austin, Dallas, and Palm Bay saw massive development, assuming buyers would keep coming. But now there are too many homes on the market and not enough qualified buyers to absorb them. Next is demand, or the lack of it. Higher mortgage rates have priced millions of Americans out of the market. In 2020, a $2,000 monthly payment could get you a $500,000 home. In 2025, that same payment might only get you $330,000. That's a big difference, and it's forcing people to pause or rent instead. And let's not forget about investor pullback. Investors were gobbling up properties in 2021 and 2022, especially in mid-size, high-growth cities. But now, rent growth has slowed, prices are falling, and the math no longer works. So, many are cashing out, putting even more downward pressure on prices. The bottom line, these cities are facing the perfect storm. Too many homes, too few buyers, and a financing environment that's killing affordability. And when that happens, something's got to give. Usually it's home prices. In the next section, we'll show you exactly which 10 cities are at the highest risk, what's happening on the ground, and how much further prices could fall. Cape Coral was one of the fastest growing housing markets in the country during the pandemic. Buyers flooded in for sunshine and space, and builders rushed to meet the demand. But in 2025, it's a very different story. Inventory has more than doubled since last year, and homes are sitting longer, much longer. Sellers are now offering $20,000 to $50,000 price cuts just to get a showing. The market is saturated and demand is fading. If you're investing here, proceed with caution. Price drops are just getting started. Denver has long been a top-tier market, but affordability has reached a breaking point. The median home price is now well beyond what most local buyers can afford, especially with rates above 6.5%. As a result, demand is cooling fast. Inventory is climbing. Price reductions are up nearly 40% year over year, and the tech job market isn't as stable as it was in 2021. Analysts expect Denver's home values to drop by another 6 to 8% in the coming months. Just south of Denver, Colorado Springs is facing the same affordability crisis, but with less economic cushion. This once booming city is now dealing with buyer fatigue, inventory bloat, and longer days on market. Homes that sold in bidding wars just 2 years ago are now facing $30,000 price cuts. The military presence still supports some demand, but not enough to stop the correction. Expect further declines as sellers adjust to the new normal. Lakeland became a hot destination for remote workers during COVID, but that trend has cooled. With more companies demanding return to office policies, Lakeland's appeal is fading. Combine that with rising property taxes and insurance costs in Florida, and buyers are backing away. Homes are lingering on the market, and many sellers are slashing prices to stay competitive. Lakeland is especially vulnerable due to its rapid, unchecked growth. A reset is coming. Killeen is closely tied to Fort Cavazos, formerly Fort Hood, and while military housing helps stabilize demand, it doesn't protect against macroeconomic forces. Builders overestimated demand, and now the market is flooded. With fewer buyers and growing uncertainty, price cuts have become standard. Investors are starting to back off, especially as rents flatten. Expect Killeen's home values to decline significantly in 2025. Especially in new build communities. If you had to buy or invest in real estate in 2025, which city would you avoid and which one would you still consider? Drop your thoughts in the comments below. Palm Bay is another Florida market that boomed during the pandemic, thanks to affordability, coastal access, and remote work. But like many boom towns, the bust is here. Inventory is surging, and sellers are cutting prices faster than ever before. Some homes have dropped 10 to 15% from their 2022 peaks. Rising insurance costs and hurricane risk only add to buyer hesitation. The bottom may still be a few months away. Known for its luxury real estate and retiree appeal, Sarasota has been hit hard by shifting demographics and inflated pricing. Wealthier buyers are waiting on the sidelines, unwilling to pay pandemic-era premiums. Sellers of million-dollar homes are now cutting six figures just to compete, and mid-range homes aren't immune either. The luxury slowdown is rippling through the entire market. Sarasota could see double-digit declines in the coming year. Once America's hottest housing market, Austin is now correcting, and fast. Tech layoffs, higher mortgage rates, and a massive inventory surge are all hitting at once. Homes are sitting longer, and sellers are negotiating harder than they have in years. Builders overbuilt during the boom, and now they're offering deep discounts and incentives just to move inventory. Experts believe Austin still has room to fall, potentially another 10%, before stabilizing. San Antonio flew under the radar during the housing boom, but prices still shot up. Now they're coming down, especially in suburban areas. Builders are offering price cuts and closing cost assistance, and resale homes are sitting for months. The city's economy is solid, but it can't outrun affordability concerns. With higher rates and buyer fatigue setting in, expect a slow, steady correction throughout 2025. Dallas rounds out our list, and it's a classic case of overbuilding meeting softening demand. There's too much new construction, especially in the suburbs, where homes are flooding the market. Active listings are up sharply, and price cuts are becoming the norm. Dallas's job market is still strong, but even that isn't enough to keep home values afloat with mortgage rates this high. It's one of the clearest cases of a market correction in real time. So what should you do with all this information? First, if you're a buyer, patience could pay off. In the cities we just covered, home prices are already dropping, and they're likely to fall further in 2025. This could be your chance to get a home below market value, but only if you avoid overpaying now. Get pre-approved, stay informed, and be ready to act when the right deal comes along. If you're a homeowner in one of these markets, this is your wake-up call. If you've been thinking about selling, don't wait for prices to bounce back. They might fall further first. Run the numbers on your current equity and consider whether it's worth listing sooner rather than later. For investors, this is a strategy moment. The days of easy appreciation are over. Focus on cash flow, not quick flips. Negotiate hard and look for motivated sellers and value add opportunities. Finally, use the rent versus buy rule of thumb. If the monthly cost to buy is more than 1.25 times what it costs to rent the same place, renting may be the smarter short-term move. In this kind of market, smart decisions now will save you tens of thousands later. The signs are clear. The price cuts are getting bigger, and they're not slowing down. These 10 cities are at the center of a housing market shift that could reshape real estate in 2025. Whether you're a buyer, seller, or investor, this isn't the time to guess. It's the time to run the numbers, know your local market, and act with strategy, not emotion. So here's the big question. Do you think these cities will bounce back, or are we looking at a longer, deeper correction? Drop your thoughts in the comments below. I want to hear what you're seeing in your city. And don't forget to hit that follow or subscribe button, because in the next video, I'm revealing one surprising factor that could flip the entire housing market upside down. And no one's talking about it yet. Your move now could be the difference between building wealth or watching it slip away.